Why Trump's miscalculation of Putin will drive oil prices to $100 next on the Energy News Beat.
Hey, let's start with our buddy David Blackmon. Love David Blackmon. He is a true energy leader, and I just appreciate him. But let me start with this one. Where energy is concerned, the One New Big Beautiful Act presents a nod to the realities of a dramatically changed political landscape and to the fact that the energy alternatives favored by the previous administration won't do the job. Elections still matter in America. I got to hand it to him. That is absolutely wonderful. But there are some holes in here where I just want to say that I'm a little bit disappointed in the big new beautiful bill in our Republicans. Inveris's research points out that generous tax credits from the Inflation Reduction Act and the EPA's update to 40 CFR Part 60, which mandates additional coal retirements, have significantly boosted demand for renewable energy projects across the United States. Indeed, the surge in investment and development in the past 3 years has been so substantial it's overwhelmed interconnection queues with a record number of projects seeking grid connections. This is a huge problem, Michael.
Well, it's a huge problem. And I personally think this bill was haphazardly put together. It does very little to actually cut down on the debt, which is the whole thing that was Trump ran on, this whole idea of Doge, and we're going to cut the debt. We're going to do all this. There are some things in the bill I like, but like every single bill, it's just been absolutely inundated with here's a little handout for you. Here's a little handout for you. Here's a little handout for you. And sure, I mean, that's how Washington works. I guess I shouldn't be surprised. I just find I'm slightly disappointed. I mean, we Republicans have the White House, the Congress, and the Senate, and they're still putting through things like this. It truly boggles my mind from this. I mean, the fact that I do like the fact that we're moving more into nuclear, as this article does point out.
I was about to say that.
If Inveris is right, then basically there's only 10% of these projects that are already in the queue nuclear-wise. They're going to be able to meet this 2028 deadline that is contained in this House bill. And I love this quote from David Blackmon. The reality would essentially eliminate any hope that projects planned to be permitted in the future years could benefit from the IRA largesse. I mean, I think unfortunately what this means is if you're looking to allocate capital now in this space, don't look for things that are about to be permitted. You got to look for things that you can get into right now. And this idea of, everyone's now going to start investing in nuclear. I mean, that's your 20, 25 year time frame away. And truly what's working right now is continuing down the path that I think where capital's already flowing. So I'm very disappointed in this bill.
Well, me too. But here's the thing. The executive order, I'm trying to work out some information on, but it has a couple loopholes. And this is where I'm going to go. I did a Scooby when I was reading this as a Scooby. What does this mean? Because the regulatory process in nuclear engineering is a nightmare and the major reason for the costs in nuclear. But the big new executive order, you had 5 new executive orders on nuclear, can be built on federal lands and bypass the Nuclear Regulatory Agency. So wait a minute. And so now those funds are available under this bill to really go after nuclear and bypass the normal procedure. You're going to see 3 new reactors in the next 3 years. This is weird, and I got to get to the bottom of it.
Absolutely. All right, what's next?
Let's go to this article. I had fun writing this one. I was watching some TV this morning, and I realized that the talking heads on TV don't really have a clue. President Trump's dilemma is now a huge political problem. Secondary sanctions to get Putin to stop the war will drive prices to 90 or 100 and is a win for Democrats. And I think this is really important when people understand that President Trump has not placed the secondary sanctions on Russia yet, because it is going to be a debacle when he does. He has lost the opportunity to bring Putin to the table with a carrot, and now he's going to use a club. This is a club. India's role. India imports 88% of its oil needs, with 40% of its 1.6 to 1.7 million barrels per day coming from Russia. That's a lot. China's role. China's role is the largest in crude, 1.9 million barrels of Russia, 47%. You just look at those two guys, that's where he's going to throw the secondary sanctions. He's going to throw them on their downstream or their refineries. Guess who's going to get impacted? It's going to be the diesel production, the gasoline production, and all of the other oil and gas products that are made going back to Europe. That's going to snowball into the United States, and we're going to see $90 to $100 oil on a global market because of this. Now, it'd be short-lived till Russia can get his fleet redone and going again, but this is a dramatic problem.
Yeah, I'm going to push back on the idea that more sanctions are going to lead to $90 to $100 oil. I don't disagree with the fact that I think Trump is now becoming fed up with Putin a little bit from the standpoint of, what we saw happen. We're recording this on Memorial Day. So
right.
What we saw last night into this morning was a massive offensive that is being put on by Russia. And it seems to be there's 50,000 troops amassing along the top border there. So Trump is becoming a little bit frustrated with Putin because he probably feels like he's negotiating in bad faith a little bit. And of course, Putin's negotiating in bad faith. It's the most obvious thing we could have said from the standpoint. Of course, he's going to tell you over the phone what you want to hear, and then he's going to continue to do what he wants to do on the backside. So I'm not concerned. I wouldn't say concerned. I'm not too shocked that this is happening. I think the interesting thing is the reaction that Trump has. Is he going to sanction Russian oil? I doubt it. Because he wants prices at 55. He's made that very, very clear. He said it out loud. Good friend of the show, Chris Wright, has said the same thing. We want $50 oil industry be damned. I mean, truly, They don't really care. We're about to cover frac count, spread, and rig counts. They're falling off a cliff. Q2 profits are going to absolutely be throttled because of this. But they want oil at $55. So I don't think they're necessarily going to do anything. They may sanction oil here and there, but I don't think they're necessarily going to go full, because I think Trump also understands that Putin's going to figure out a way to get his oil to the market, regardless if there's sanctions. India's going to buy it. China's going to buy it. So I think this idea that sanctions are going to drive prices to $90 or $100 is, I think, the last breath of all of the oil bulls grasping for something that can satisfy their need for high oil, when we just need to, in my opinion, settle in for $60, $65 oil.
There's a lot for me to digest and disagree with you on that. And when we sit back and take a look, the oil bulls, I'm an oil bull in the $70 to $80 range, because that's where it's going to settle out. That's where my bully is. My bull sitting in the backyard, he says, he's going, Stu, it's going to be around the 70 to 80 range. But that's normally because of just the decline curves that are out there. Now, here's the real loser in this. President Trump is the real loser, because he's now backed into a corner. And if the Democrats and the rhinos have not codified any of the really problems that have been found by Doge by now, they're not going to get done. And we've got a rhino and Democrat problem.
Yeah,
so President Trump is a loser.
All right, what's next?
President Trump is the loser, not a loser. Let's go. I want to make sure that did not come through the transcript wrong. Let's go to Technip Energies bags Cyprus LNG gig, and how does this impact Cyprus's clean energy? Michael, I added this update. This bottom part of this update came in from our feed from lngprime.com. The import terminal is part of the EU project of common interest that seeks to introduce natural gas to Cyprus. Well, that caused me to think, what does that mean? And how does Cyprus play into this? You back up, and that's what I added in the top part of the article. And that is the FSRU, which is the regasification unit, which is an old tanker built and updated in China that is now being used, and they're going to tap into the Leviathan field through new pipelines, and then that can go in through Europe. What's in that tanker? I found out there's Chinese equipment that can be remotely shut down. Holy! And that goes to our other article about Chinese equipment and everything else. Why would you want to put in Chinese equipment into a regasification unit that can be remotely shut down?
No, I mean, I wouldn't want to do that at all. Now, I think there's some very interesting things to think about this. LNG, has become a huge topic over the last 6 months with, all this Saudi and Middle Eastern money flowing in here. I do think from a European standpoint, they're gonna go heavy into LNG. I'm curious, Stu, from an executive standpoint, you're both a oil bull and an LNG bull. And if I had to put a gun to your head and there was two projects and you could only allocate capital to one of them, where are you going? Are you going LNG or are you going oil?
LNG.
Why is that?
Because LNG's got a lot longer life cycle for volume. And the volume can go for LNG. Look at the cruise ships, the container ships, the cargo ships, the trucks. LNG molecules will be in demand longer than the oil demand. Cyprus is a perfect example of that. They still use fuel oil to generate 10%. I believe I have to go look at their numbers. Some number of fuel oil is just like Hawaii. They got to get rid of that, get rid of the oil and use LNG or natural gas.
Yeah, and it's a very easy rotation there. So I completely agree with you. I would be allocating capital if I was in Europe to LNG and not necessarily oil projects. Let's move to some wind stuff.
Let's go to Northvolt to wind down battery making in Sweden, a blow to Europe's energy transition. Northvolt actually turned out to be one of the brightest hopes for a homegrown electric vehicle EV battery. And the problem is, Michael, this is not only an interesting story, this story is kind of a trend for the renewable and the EV markets. And when you sit back and take a look, I put a goofy looking T-Rex in here. Life will find a way in Jurassic Park, Michael. Low cost energy will find a way, or regimes or financial collapses will occur. So, I mean, I think that we've got a tie to Jurassic Park here. Weak, but we got one. But anyway, Northvolt's rise and fall is going to be Tesla's executives, Peter Carlson and Paulo, I apologize for butchering your name, Paulo Crute. Northvolt aimed to produce the world's greenest lithium-ion batteries. I hope they had a self-fire stopping feature. But anyway.
Well, I mean, this article also points out the absolute financial mismanagement of this company, along with the fact that their co-founder, Peter Carlson, stepped down just after filing Chapter 11 bankruptcy, pocketed basically $200 million, and that needs to be translated into whatever their, Sweden, whatever their
dollar is.
Their dollar is. But I mean, that's a pretty, talk about an ESG grift.
I wonder if he'd be a sponsor of the show. What do you think?
Yeah, he's got the money for it.
Yeah, maybe we could get a new T-Rex generated picture here.
All right, guys, let's jump over and cover oil and gas prices, but let's go ahead and pay the bills real quick. As always, guys, all the news and analysis you've heard is brought to you by EnergyNewsBeat.com. Please continue to support the show by checking us out there on EnergyNewsBeat.com. You can also support the show. A great way to support the show is subscribing to us on Substack, TheEnergyNewsBeat.substack.com. If you're so inclined, go ahead and do a paid subscription. That really helps keep this show moving forward. We're posting a lot of great subscriber-only content. We had a great feedback from our State of the Market that we did last week. We're going to start doing those monthly, but they're going to be behind the paywall. So the only way to get that is be a paid subscriber. Go ahead and check us out, TheEnergyNewsBeat.substack.com. Thank you to Reese Energy Consulting for supporting the show. If you're in the upstream, midstream space and you are not working with a marketing company or need help, when it comes to all this LNG that we're talking about, Reese Energy Consulting is the place to go. That's reeseenergyconsulting.com. And finally, guys, if you are wondering where to allocate capital in 2025, if you're CIO, if you're working at a family office and you're wondering where do I allocate capital specifically within the energy space, we have a great ebook that we have at investinoil.energynewsbeat.com, which will walk you through all the different ways you can invest in the energy business. And then we are happy to get with you and talk to you about what investing in Energy looks like. Again, that's investin.oil.energynewsbeat.com. All of the links below are in the description, Stu. But let's run through top line headlines, Stu. Markets in the U.S. are closed. The S&P 500 and NASDAQ were both down a little bit on Friday, 0.6 and 0.9 of a percentage point, respectively. 2 and 10-year yields basically flat. The 2-year yield was flat, while the 10-year yield was actually down about 0.4 of a percentage point. We did see the dollar index drop about 1/10 of a percentage point. Bitcoin is pushing $110,000. Crude oil is open today. Markets are pretty slow. We're at 61.49. Brent oil 64.68. That's basically flat week over week. Natural gas down about 1.8 percentage points, $3.27. XOP, which is our EMP securities contract, basically flat on Friday, 120.84. And, really what has moved prices, or slightly moving prices towards the positive side, is three things. One, we've got the prospects of possible more sanctions on Moscow. We covered that earlier in this show. Obviously, today being Memorial Day, thank you to all of our veterans and those who have obviously paid the ultimate sacrifice for the United States. We'll see limited trading due to just lower volume here on Monday. But always in the foreshadow is OPEC Plus, that could agree to continue to push supply further. Really, when we dive into the European Union, Trump went ahead and extended the deadline for trade talks that he is having with the European Union. Both the Brent and crude oil traded up earlier in the session after that deadline was pushed to July 9th, which again gives us a temporary reprieve on that. I love Giovanni Stavano. He said, quote, Trump's pivot by postponing higher tariffs to the EU and his comments on possible sanctions on Russia are moderately supporting crude prices. Trump said in a Truth Social post, Vladimir Putin, quote, has gone crazy in all capital letters by unleashing that large aerial attack we mentioned on Ukraine. And again, he's weighing new sanctions. So a lot going on there. We did see rig counts and frac count spreads on Friday. From a rig count side, dropped 10 rigs, getting pounded. 566 rigs total. On the frac count spread, dropped by 7 down to 186 frac crews. So people are reacting to this, Stu. I mean, there's no way about it. Rigs are dropping. Frac crews are dropping. Tariffs on steel have basically gotten to the point where it doesn't make sense just to even drill wells. I mean, 3 months ago, I would have told you that we'll actually see rigs stay fairly flat. We'll see frac counts drop, if only because no one will be fracking, but people will be ducking wells. People aren't even ducking wells anymore, Stu. They're not even thinking about putting pipe in the ground. They're pulling back. They're only drilling their top best locations, which you'd think people do all the time, but there was a little bit of a game with these drill schedules. So very, very fascinating. Finally here, OPEC's latest report, a strategic move to challenge U.S. shale oil companies. They went ahead and basically released their latest strategy, which basically floats the fact that they are going to accelerate output hikes. This came in early May, as we know, adding that 411,000 barrels per day in June, and attempting to potentially bring back that 2.2 million barrels per day by November. That's according to our friends over at Reuters. The funny part is that this is designed most likely to target U.S. shale, and there's a pattern to suggest this. We go back to 2014. OPEC abandoned those output restrictions that it had in order to squeeze U.S. shale, which did hurt. We saw a lot of bankruptcies in 2016, 2017. We did also see technological advancements that allowed, for more output per well on a per foot basis, on a barrel per foot basis, which did allow shale to plow through. That did, that time though, which is, people think that 2014 was the time when U.S. shale was squeezed out. OPEC's market share actually went down from 40 to 25% by the time we sit here today in 2025. The theory goes today that U.S. shale is more vulnerable. We've seen costs risen. A lot of the best acreage has already been drilled at what we would call sub-technological limits. If you drilled the best acreage back in 2020 and you drilled it at 1.5 mile lateral, when you could have maybe drilled it today at a 2-mile lateral using bigger fracks, more sand, you could have theoretically gotten more barrel per foot, which I find it interesting. Again, going back to our favorite T-Rex, low cost energy will find a way. That I think is the critical piece. And I think what you're seeing is a move towards offshore. You're seeing a move towards, we may have to spend a lot more capital, but that capital needs to be spent on a on a, that incremental barrel needs to come at the incremental lowest price. And whether or not that's offshore, onshore, we're seeing Chevron attempt to move heavy into Ghana. So I think there's a lot of things changing. And if you're an investor in the space right now, it really begs the question about where do you allocate capital? It seems to be that this move by OPEC is designed to maybe bring back market share. It could be an appeasement to Trump. I think there's a little bit of that in there. I don't think this is necessarily their attempt to squeeze U.S. shale as much as it is an attempt to appease President Trump. Now, in the process of appeasing President Trump, they're going to squeeze out U.S. shale again, which I just find ironic considering, we all voted for him. I'm not saying I wouldn't do the same thing again, but people are upset, prices are low. Well, you get what you reap what you sow. That's somewhere in the Bible, I think. So the point of the matter is it's going to be interesting to see what happens. But if you're a capital allocator in this space or looking to allocate capital in the space, you got to think differently. Gone are the days of we're just going to go dive straight into the Permian or the Delaware. There's still that opportunity, but you have to have billions and billions of dollars. And if you do, there are still plays available in that area that are work. But I think what you're seeing is a pivot towards conventional assets. I think what you're going to see is a pivot towards offshore resources, and what Stu said, a pivot towards large international LNG projects. So it's a fascinating time to be in the energy business, Stu, and we'll keep everybody up to speed on what they need to know and how they need to continue allocating capital in the space. But my favorite segment of the week, Stu, what should people be worried about this upcoming week?
Oh, just buckle up. What a time to be in the energy business. I mean, I love our analyzation of oil wells and what we do to really make sure, hey, is that well actually going to be a viable well? That I like. That to me is fun. The news cycle, holy smokes, I've lost my front teeth from drinking from a fire hose.
Well, the news cycle is meant to inform. The news cycle is not just the news. It's, hey, what does this mean for me, the capital allocator, person in the oil business, potential LP? So I think there's all of these news articles funnel back into what decision do I need to make, and that's why people tune in to the energy news beat, guys. But with that, we're gonna let you get out of here, get back to work, start your short week. We appreciate everybody starting your week with the energy news beat. For Stuart, Turley, I'm Michael Tanner. We'll see you tomorrow, folks.